Hello everyone. This is the pre-market report video for today, 13th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, for the first time, Nifty opened above 21,000, but again another session it struggled to sustain and closed near 20,900. Here, large banks and energy stocks were the major Nifty draggers, so let's see those in detail. First, regarding banks, yesterday, IRDA, Insurance Regulatory and Development Authority in India, gave an approval for all Indian non-banking financial to start the insurance business. Because of this new competition, all the banks who got the established insurance business was under pressure, whereas all the NBFC who are interested in insurance sector turned as positive. Then, regarding energy stocks, from November onwards, Nifty Energy increased over 20%, and since December, it's up by near 10%. So it's just sector profit booking before the inflation data release. So both these sectors related stocks alone contributed near 80 points downside out of 90 points Nifty down. However, despite this, yesterday both FII and DII were net buyers. FII net bought for marginal 77 crore rupees, whereas DII net bought for near 1920 crore rupees. Together, overall net institutional purchase was exactly 2000 crore rupees. Then, after the Indian market, all European major index closed near flat. Regarding US, before their market opening, US Bureau of Labor Statistics released the consumer inflation data. If required, please pause and have a look. The top two is the core consumer inflation for November month, whereas on the bottom it's overall. As we know, core means without food and fuel, and for US investors, always core inflation is more important. Anyway, coming to data, core inflation on month-on-month basis, it increased 0.3%, which is higher compared to October month 0.2%. However, it's same as analyst expectation. Regarding core inflation year-on-year basis, it's same compared to October month and analysts also expected the same. Now, coming to overall consumer inflation, on year-on-year basis, it continues to decline 3.1% in November month compared to 3.2% in October month. This is really a good thing since it's declining, but no surprise as analysts expected the same. However, on month-on-month basis, it increased marginally to 0.1%, whereas on both October month and analysts expected no increase. Overall, the data is neither positive nor negative. Again, we got the data. Now the next important thing is how Fed people going to interpret this. However, even this non-directional data, market took it as positive, though there was a negativity around energy stocks. All three major US index managed to close significantly positive. In the end, Dow Jones increased 0.43%, S&P 500 up by 0.39% and Nasdaq up by 0.2%. In case of VIX, it increased to 2% and moved above 12.5. Then coming about oil, I don't know how and why, but most of the website and analysts mentioned that this inflation data made the oil price to down by 3%. I understand drop in oil price affects the US energy stock, and I also understand non-favorable inflation number affects the oil price. But my point is, why this data? Since it's more of neutral one and even oil price 3% drop coincide with the announcement of this inflation data. In the Eastern Time afternoon, US EIA released the short-term energy outlook and they mentioned that there will be a huge drop in oil demand on the first half of 2024. This drop in oil demand report got the potential to push the oil price down over 3%, but the price dropped even before the EIA short-term energy outlook released. Anyway, coming to the value, at the time of this video, Brent crude closed at around $73.5 US per barrel and WTI crude trading just below $69 per barrel. Moving on, regarding Indian ADR, as it is in line with Indian market, only HDFC Bank closed negative, all others closed positive. Here, if we calculate the arbitrage, then again HDFC Bank looks more positive, possible of near 3%, whereas all others 0.5 to 1.5% positive. One more thing, last night both Accenture and CTS also closed positive. So considering all those, the more probability is that IT to trade positive. Then about banks, it's difficult to predict HDFC Bank as it got the huge arbitrage difference of 9%, but still from the data perspective, it looks positive. In case of GIFT Nifty, early morning it closed at 21,040. Considering the premium of 90 points, for now it's indicating again marginal gap up opening of 20 to 50 points. So those were the things happened last night in the global market. Now let's look at the India specific information. First, regarding India's consumer inflation, for November month it increased as 5.5%. In comparison, on October month it was just 4.87%. So generally inflation increased, which is bad, but on the positive side it's still below RBI's upper target 6% and below the analyst expectation 5.7%. Here, unlike US, for India, food inflation is the most important one, which accounts for near half of the overall consumer inflation weightage, was increased to 8.7% in November, up from 6.61% in October month. Other than that, the core inflation, which as we discussed earlier, without volatile food and energy, was increased just to 4.05% in November compared with 4.28% in October. So from people perspective, it's bad data, but from stock market perspective, good data. It's a Dharma's dilemma. Then another positive macro, India's industrial output growth comes as 11.7% year-on-year basis in October month, which was the fastest pace in last 16 months, beating the analyst estimation just 10%. Sector-wise, most of them really good. Electricity generation increased 20%, mining activities increased 13.1%, consumer durables up by 15.9%. Infrastructure goods and capital goods grew 11.3% and 22.6% respectively. As a summary, US market closed positive, GIFT Nifty indicating the gap up of 40 to 50 points. Then both IT and banks area looks positive as well. In addition, all the macro released related to India looks very good as well. However, this nervousness around 21,000 mark and tonight Fed Chairman FOMC press conference is a bit of concern, which might trigger some profit booking. About the things to look out, early morning lots and lots of Japanese manufacturing related data is due, and during our market hours at 12:30 p.m. UK's GDP data, and at 1:30 p.m. China's number of new loan issuance is scheduled to release. And in the aftermarket hours for US, their wholesale inflation data, crude oil inventory, OPEC's monthly report, and more important, around 12:30 a.m. Indian time tomorrow morning, Fed interest rate decision, and at 1 a.m. Fed Chairman's press conference. So these are some of the items we need to keep an eye out today. Coming to technical, as we discussed, though Nifty opened above 21,000 mark, it struggled to sustain and down by 90 points. Thus, on the daily chart, it formed a bearish candlestick pattern which resembles a bearish engulfing kind of pattern, but not the exact one. So the decline signals an attempt to a downside breakout of the range movement between the range 20,850 and 21,000. However, still it traded within the range. So now Nifty is currently placed near the immediate support 20,850. Hence, further weakness from here could cause a downward correction. Then the next support is at 20,700, which is the 10-day exponential moving average. However, yesterday too, Nifty hit a fresh record high on an intraday basis. Thus, till the breakout, the near-term uptrend is still intact. Hence, as long as the support levels are held, the consolidation may continue in the coming sessions. Whereas on the higher side, Nifty needs to close firmly above psychological 21,000 mark for the strong upside. In case of Bank Nifty, it also performed similarly to Nifty. Bank Nifty opened higher but remained lower for major part of the session. Thus, on the daily chart, it formed a bearish candlestick pattern. However, very important, it managed to hold the 47,000 mark despite selling pressure and closed near 47,100. Thus, overall, the trend is still positive. On the downside, 46,800 is the crucial support, and until that is held, we can expect the Bank Nifty to resume its up move towards 48,000. Regarding weekly options front, the maximum call option open interest was at 21,000 strike, followed by 21,500 and 21,200, with new call option writing at 21,000 strike and then 21,200. So again, options data indicating that 21,000 is expected as a crucial resistance level, as crossing it can take the Nifty towards 21,200 level. Whereas on the other side, the maximum put option open interest was at 20,900 strike, followed by 20,500, with new put option writing at 20,500 strike, then 20,600. Hence, the immediate support is still the same as yesterday, 20,900. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.